A massive new tax bill just passed through the House, and if you thought Trump's first tax cuts were big, this one might be even bigger. From permanent lower tax brackets to tax-free tips, tax-free overtime, and even free money for newborn, this bill touches nearly everybody. So whether you're a parent, a business owner, a rideshare driver, or just tired of watching the IRS eat your paycheck, these are the top 10 tax changes you need to know about in Trump's new big beautiful bill. Number 1, lower tax brackets are back for good. You've been saving money on taxes since 2017, you didn't even know about it. In 2017, federal tax brackets were lowered across the board. For most people, it meant saving around 1 to 2% of their taxes. Now that doesn't sound like much, but on $50,000 of income, that's $1,000 back in your pocket. Those cuts were set to expire back in 2025, but the House just approved a bill to make those lower tax brackets permanent. That means your paycheck stays protected, even while inflation tries to eat it alive. This isn't just a win for the rich, this helps anyone trying to stay afloat. Number 2, Social Security still gets taxed. Remember when Trump said Social Security wouldn't be taxed anymore? Yeah, unfortunately, that's not going to happen. Here's what did. Seniors 65 or older making $75,000 or less will get an extra $4,000 tax deduction. That's about $800 in real-world savings. This sounds helpful until you realize removing taxes on Social Security completely would have saved them $4,000 to $6,000 of actual cash. And this affects younger people too. Social Security is already under strain. If retirees are already getting crumbs now, what do you think will be left for you 30 years from now? I already have a plan that helps people avoid paying taxes on Social Security and retirement income, so message me directly if you want to learn more. Number 3, 100% bonus depreciation is back. The IRS isn't going to tell you, but the politicians will. Tesla Model X, G-Wagons, and Airbnbs are back. The House just approved bringing back bonus depreciation at 100%. Let me explain both strategies in plain English. If you buy a vehicle used exclusively for your business like a G-Wagon or a Tesla Model X, or even a big pickup truck, you can write that entire cost in the same year. Again, if you buy it for $100,000, you can write it off for $100,000 off your taxes. Insane. If you're buying short-term real estate like an Airbnb or a VRBO, you can write off a huge chunk of that purchase price upfront using an advanced bonus depreciation technique called a cost segregation. I have other videos talking about these in detail, so watch my other videos to find out more and why this strategy is super important. Number 4, the SALT deduction is raised to $30,000. If you live in California, New York, New Jersey, Hawaii, Oregon, Minnesota, Connecticut, Illinois, and yes, even Texas, you've been getting taxed to death on your state and property taxes. SALT stands for state and local taxes. Since 2017, the federal cap on the SALT deduction was $10,000 on the itemized deduction. That means if you paid $20,000 or more, that's too bad, you couldn't deduct the rest. Now, that cap is being raised to $30,000. For someone in the 22% tax bracket, that's an extra $4,000 to $5,000 in actual savings. There's a catch. If you earn more than $200,000 single or $400,000 married, you might get phased out. But for everyone else, this is big. Number 5, tips are tax-free. If you earn tips, you've been probably hiding that money away from the IRS to avoid taxes. Well, you can finally stop committing illegal acts and maybe you can finally buy a house. Here's why. If you work in a traditionally tipped role, like servers, bartenders, barbers, rideshare and DoorDash drivers, and even hotel staff, your tips can now be tax-free. The tips must be voluntary, so you need a system to separate your service fee and wages versus the tips. This is the kind of move that helps people who work and hustle every day. This is huge because if implemented, all of you who have not been reporting your tip money can finally report it on paper without fear of getting taxed. And in addition, you might finally be able to qualify for a house or even a car. Number 6, overtime could be tax-free too. This is a new proposal that would make overtime portion of your pay tax-free. So let's say your overtime rate is $30 an hour and your base rate is $20 an hour. That extra $10 could be tax-free. Industries that would benefit big from this would include healthcare, construction, manufacturing, transportation, public safety, utilities, and hospitality. I used to be a CFO for a construction company, and many of my guys, 10 to 15% of their paycheck would be in overtime. This can be an instant 10 to 15% raise for millions of workers. Imagine all the nurses getting paid overtime. They are definitely rooting for this. Number 7, car loan interest deduction. What if I told you that the IRS might help you pay off your car loan this year? There is a new proposal that would deduct up to $10,000 in car loan interest, and you would not have to itemize this in order to qualify. Again, you do not have to itemize, so anyone that has a car loan could qualify for this. The qualifications would be, number 1, you must make under $100,000 single or $200,000 married, or number 2, the car has to be made in the United States. Now let me break down on how this will actually impact you. A $60,000 car loan at a 6% interest would be around $3,600 of interest in the first year. That can save you about $800 in actual taxes. So whether you're shopping now or still paying off an older loan, this might give you instant relief. Number 8, the child tax credit is increasing. The child tax credit is going from $2,000 to $2,500 per child. That's $500 more per kid. Not bad, but during the pandemic, families got $3,000 to $3,600 per child. So this bump feels a little small in comparison. Still, if you got 3 kids, that's an additional $1,500 of tax time. Raising a child costs $16,000 a year, so I guess every little bit helps. I fully expect this provision to pass. Number 9, Trump accounts. $1,000 for every newborn if your child is born between 2025 and 2028. The government will open a Trump account and deposit $1,000 automatically as long as you claim them on your tax return. These funds will be invested in the U.S. Stock Index Fund. At age 18, your child can use it for education, a home, or even start a business. By age 30, they can withdraw it for any reason. Parents, custodians, and even nonprofits can contribute to this account. Qualified withdrawals are taxed at long-term capital gains, and there are still rules being developed for this, but I can see this being a wealth-building tool for the next generation. I'll be interested to see how this stacks up against 529 plans and other custodial accounts. And the last one, number 10. EV and solar credits are ending early. The $7,500 EV tax credit and the 30% solar panel tax credit were supposed to last until 2032. The new bill cuts both of these off by December 31st, 2025. That means you only have 6 months to act. And let me remind everyone how this works. For electric vehicles, as long as you're under certain income limits, you are allowed to take the $7,500 tax credit to lower the purchase price or take that as a tax credit on your tax return. Either way, that's a huge incentive to purchase an EV that will be no longer available after this year. For solar panels, you can get a 30% tax credit on your tax return based on the purchase and installation price. If it costs $50,000 to get solar panels installed, well, that's a $15,000 tax credit on your tax return. Solar takes about 2 to 3 months to get installed because of other factors such as permitting from your city, so you need to act now, otherwise you may miss the deadline. If you are waiting to pull the trigger for either of these, this is your final warning. So there you have it. These are the top 10 massive changes from Trump's new tax bill. There's a lot more, but these are the top 10. The Senate still needs to vote on it. There can still be some changes or other alterations for these proposals. Look, whether you're a business owner, a W-2 worker, a side hustler, a parent, now is the time to get informed and take action. Tax season won't wait, and neither should you. Subscribe for more breakdowns just like this. Let's get your money working smarter this year. Peace.